In this update, we explore the very powerful market metric that suggests Bitcoin could go to $30,000 before the low is printed in this cycle. And when Raoul Pal tweets or speaks, I listen, and why you should too. And some very interesting comparisons between Bitcoin and Amazon. Stick around. What is up, guys? Tex here from unitytradinggroup.com. Thanks for stopping by. Yeah, some interesting things to unpack in this killer tweet from Raoul Pal, who's the founder of Real Vision and ex-hedge fund manager, very successful investor over time and a very vocal proponent of cryptocurrency, Bitcoin and Ethereum mostly. And when he tweeted this yesterday, I thought straight away, I've got to record a video on this and share this with you because there are so many golden nuggets in this thread, as there are with most of what Raoul posts, but I thought I'd unpack this because it's really relevant to where we are right now in terms of this market and how you as a trader can adopt some of the strategies, or let's say the methods that he sort of subconsciously speaks in this thread to probably make you a far more profitable trader. So let's get into this. So he says in this tweet, just as a reminder, you can't use daily or weekly charts if your time horizon is years. You're either in this for the network adoption over time or you are a trader. I am not a trader in crypto. I can't care less about 50% swings on a volatile asset. So there's so much truth in this because for 99% of people that I talk to, and probably 99% of people that are watching this, no offense, the most profitable strategy for you is just to simply buy an asset, whether it be Bitcoin or otherwise, and sit on it. Don't trade it. Don't trade the range. Don't try and sell tops, buy bottoms, all that sort of stuff. And that's what Raoul was speaking to in this start of this thread. You know, he's seen Bitcoin downturns or market downturns where 9 times out of 10 they often end up recovering, and we've seen that in Bitcoin. We've seen, you know, Bitcoin has been promoted as being dead by the mainstream media hundreds of times, and every time that we've fallen 90%, let's say for example in 2011 with the MT Gox hack, or in 2021 where we saw a 50% reduction from the May top, last year when we saw that black swan, or a couple of years ago when we saw that black swan event down to 3K on BTC. Every time we've recovered. And if you look at Bitcoin, the best performing asset of all time, we've recovered every single time. So if you've got the diamond hands and you've got the patience and the mental capacity to sit on your hands and know that the future of Bitcoin is far greater than what it is right now, then you're in it for the fundamentals. You're not a trader, you're an investor. Certainly as someone like myself, you can have that investor hat on where you have your allocation of crypto assets that sit, they're in cold storage, they don't ever get touched, and then you've got an allocation that you can afford to lose to trade with. That's your tuition into this crazy crypto school that we all play in. So it says, in the end, the only technicals that matter, Metcalfe's law, which we'll talk about in a moment, which suggests a $30,000 BTC bottom on this run, really important to look at. The log chart, the 48-month exponential moving average, that's the EXPMA that he's referring to on the next line down. And he says maybe the trend since 2015. So he says, I seriously doubt the bull market ends at a regression trend, being like a parallel channel. It should see one standard deviation higher. And if you look at someone on Twitter who I follow a lot, his name is Dave the Wave. He shows this log chart quite a fair bit and shows comparisons of fractals where BTC has fallen from the highs or recovered from the lows, and gives some really beautiful explanations about this log channel, the growth metrics of Bitcoin, and how you can use previous information to give you future information, which is why the value of the exponential moving average is so powerful. So he says, BTC is cheap versus Metcalfe's law. It has been for a long time. My guess is because there's less network applications on BTC currently than Metcalfe's law would prefer. So Metcalfe's law was around since the internet days, and it's what it states, or what the model gives us, is that the value of a network is only as strong as the number of users on that network. And if you look at Bitcoin, the fact that we don't have a ton of network usage, the same thing for Ethereum in the sense that it's the high gas fees. When you look at something like Solana that comes along, your transactions per second is far higher, but we're getting off track a little bit here. But what Metcalfe's law is stating is that Bitcoin is still cheap versus the number of users on the network. So the number of nodes is still relatively low in comparison, which still says that BTC is very undervalued. So he talks about some other things here too, as well. He says maybe the macro weight on Bitcoin and digital assets as liquidity is reduced, but never listen to the consensus in terms of rates. It's usually wrong, and the network model assets generally do fine with rates when rates rise anyway. This is Amazon. So he's talking about, what is he saying here is that all the downturns in Amazon, regardless of what's happening in the traditional market, sort of has shown that Amazon is a little bit of a unicorn asset, and it will recover every single time. And this this is why when you see people talking about the comparisons between 2021 Bitcoin, 2011, 13, 15, 17, and then there's this comparison between Amazon, it's quite relevant, because when you look at Amazon as a unicorn company, one of the most successful companies of all time behind the likes of Twitter and a few other ones, the Saudi Oil Co. We've never seen a company like Amazon or Apple in modern times. So the comparison between that and Bitcoin being a unicorn asset, in my opinion, is very, very relevant. What he says here, it's usually when rates have gone too far that stocks get hurt, along with other assets. Thus, any initial sell-offs are usually temporary on initial fears. That would be like newbie fear and capitulation in Bitcoin, for example. And when rates have finally gone too far, rates get cut and the low in growth or stocks is put in again. So what he's saying there is that every time that everything has fallen, they cut rates to try and recover the market. We see that here with interest rates in Australia. They typically would lower interest rates to prop up the economy a little bit, and then you start getting to periods like what you see in Europe with negative interest rates. He said it's also not clear if now if slowing the economy will stop rate hikes. This happened after almost every recession since the 1960s. It takes a few years for the economy to normalize. This time around, I'm sympathetic to the idea that economy cycles will be more violent and shorter. I totally agree with that when it comes to Bitcoin as well. The best comparison I can give you is on altcoins. Back in 2017 or the end of 2017, we saw a months and months long altcoin rally, or a few months long altcoins on the back of BTC, that parabolic rise that we had at the end of 2017. And then, as I've said to a lot of guys that I talk to inside the Discord, you can go to unitytradinggroup.com and jump in free. It's an open channel. We had these like alt storms now. We don't have these alt seasons. We don't have months long periods where altcoins are flourishing. We have these pretty short, sharp, and violent up to the upside moves on altcoins where we have a couple of weeks to make the most of the cycle that we have. And I think that will be the case a lot for Bitcoin in the new year or in 2022 and beyond. I think the rises will become short, sharp, and the falls will become short and sharp, where we consolidate, we dump quite quickly, and we recover quite quickly as well. So I think there's a lot to that point that Raoul speaks about. I don't think that would just be for the traditional markets, but certainly for Bitcoin and for cryptocurrency as well, because we can't discredit the fact that the markets are tied. The traditional markets and Bitcoin are coupled. The decoupling has not happened. So he says, but that means that the real rates likely stay negative or low, so risk assets over time remain attractive. If inflation is here to stay, which many believe, I don't, then you want to own inflation protected assets with fundamental drivers, DAs being digital assets, over time. So people were talking about gold, Bitcoin being the internet gold, the store of capital when things are dropping, or you hedge into BTC as a stable hedge. It's not the case at the moment. So he said, I'll leave you with an interesting comparison. Amazon is a Metcalfe's law stock. Back in 2003 to 2011, it looked like this. So we had quite a long consolidation period there, a 3-year long essentially consolidation period from the high to the low before the next, let's say, parabolic move over the course of the 12 to 18 months on Amazon. We saw quite a significant pullback in 2008. Of course, the whole economy suffered quite a lot in 2008 with that subprime mortgage crisis over in the States, and then a quite rapid rise over the course of the next year and a half, a short consolidation period, and then the next rapid rise moment. So similar to BTC, and what this is showing you as well is that the pullbacks are shorter and a little bit violent, but they're less violent than what they were in years past. So we went 50%, 49%, 20%, consolidated for a shorter period of time, and then had that upward move. Same again here on BTC from 2013 to 2016, from the high to the low, 76%, quite a long consolidation period there. We had that parabolic run to the upside in early or late 2017. We had our bear market, which was a couple of year-long bear market, a 79% fall from the highs, which makes sense there. While we would maybe anticipate this to be slightly lower than what we saw here, this was the first real mass adoption in terms of retail trading where Bitcoin was really well known. You could walk along the street and you would hear people talking about XRP or Bitcoin or Litecoin. That was the first time, I think, in, let's say, modern times, since 2011 at least, where that happened. So you would imagine the pullback would be significant. There was a lot of new market participants here that were unfamiliar with market cycles, that were selling out out, capitulating, or getting liquidated. And then again, the move up, and then a 33% pullback at the time of posting this from the local highs here, with a shorter, smaller consolidation period of a dip of 32%. So definitely makes a lot of sense what he's saying here now, which rhymes with BTC. In the short term, Amazon looked like this, which was the daily chart here between 2009 and 2010, where we can saw some pretty decent runs up, a pretty swift pullback, and then continued runs to the upside, and then pullbacks, which looks very familiar to where we are right now on Bitcoin. So a very familiar pattern between Amazon in that period and BTC now here, just a slightly higher high on BTC before that pullback. So it suggests that BTC, and this is regarding to Metcalfe's law, mind you. So what it's saying here is that it suggests that BTC might even possibly test 30,000, but I doubt it. This is what he is saying. I'm verbatim him. I think the sell-off is near done, but who the hell knows? It's similar enough for context, but never relies on fractals. They're for context only. The BTC fractal is longer in time than Amazon and more volatile. It absolutely is. But what he's saying that is after the Amazon dips, it went up fast. He said BTC is more volatile. It goes up and falls more in corrections. But as Amazon and other proven network stocks over time see shorter cycles and less downside, I think we're going to see that in BTC and ETH too. I would agree with that. As liquidity increases in the cryptocurrency space or in the market, and BTC and ETH being the two biggest absorbers of liquidity in this market, or the two biggest markets within cryptocurrency, that totally makes sense. You look at something like the Forex market, for example, which is mountains times bigger than cryptocurrency. Crypto will I don't think in our time will ever be as big as Forex, but certainly you see there's less volatility, shall we say, in Forex. It's very volatile because people are very highly leveraged, but in terms of the moves, the more liquidity means that TA is respected better. There's less dramatic dips in the market. The only time is when you would see something that's very dramatic in the Forex market is COVID, for example. Perhaps you might see a currency dip or increase on the back of a presidential election or a prime ministerial election. But as he says here as well, in the end, it's all noise. The log chart is the truth, and that in itself is an approximation of Metcalfe's law. If this isn't noise to you, your position is too big for your time horizon. Good luck and have a chill pill. So what he's saying to you, if you're worried about this, you've probably got too much skin in the game, whereas you need to have that investor mindset on, and you let things run their course. Why does he use the log chart? Because the log chart is almost like a moving, like an exponential moving average in itself, that it smooths everything out, as opposed to your linear charts, which show every move and dramatic move to the upside or the downside. So the log chart makes it a lot smoother to give you an overall idea of the true growth of Bitcoin. So let's have a look at this. I just want to talk about this in terms of Wyckoff and where we stand at the moment on BTC. So this was back in May when we had this Wyckoff accumulation phase. We had our move to the upside. We have our markup, our distribution phase, and then that leads us to where we are now here on these levels. So we've now reached the end of maybe our initial spring phase, in my opinion, whereas back here in December or mid-December, I was expecting a move to the downside. We didn't have that. We had a move upside. This was front run, and we've now come back down and retested where we are. But looking at where we stand here at the moment, you might be saying, oh, why are you moving between charts? It just makes things a little bit easier when I've got other things on charts which are a little bit sort of noisy. So if we come out to the daily chart now, in terms of where we stand, we have made a new lower low from this initial wick to the downside, and I drew these charts up in this Fibonacci chart up a couple of weeks ago now, and I spoke about that 51k range and 45 being our range, where I thought we were looking to be within the beginnings of an accumulation zone, which I think is relevant to where we stand right now. Undoubtedly, people are still accumulating, but where it stands right now, I think our fibs are telling a pretty important story, because we draw from our swing high to our swing low. We're coming back down up here, and I wonder if we will get a bearish retest of this zone, and then one final move to the downside towards that 37k, let's say 38.5k on BTC. I think that's the likely outcome at the moment of where things stand, whether we get that retest or otherwise. If we go back down towards the 4-hour time frame, you can see this looks familiar. It looks quite familiar. And I'm just going to share with you something as well that I noticed yesterday. So we might look to see something similar to this, where we may end up seeing a small recovery from here, but then we get a retest of the range lows if we can break above this, let's say 43k confidently. We can hold and break above 42.5 and hold that level. We may end up seeing a retest of this 23 and 38 levels, which we know are very good for pullbacks, before another move to the downside, which would bring us towards the end of January, the beginning of Feb, which would align pretty well with what I said, is that I thought that January would maybe look to print the local bottom in this run. From there, we may end up finding an accumulation zone where we may accumulate for a couple of months. From that, we would then perhaps see a very nice and short, quick little alt season. Hint, short, so you need to make the most of it when it comes to this cycle. And then from there, we begin to continue moving to the upside. Do I think we will have as dramatic runs in 2022 as what we did in 2021? Perhaps not. 2021 was a really good catalyst for growth in this market. We had stimulus checks being given out in the States. We had people playing at home, a lot of people losing their jobs and looking for alternate sources of money when they couldn't be employed by someone because businesses have gone shut. So certainly, 2022 may see more stable growth, which would be a great thing for BTC. If we can see a stable continued growth rather than these rapid moves up and rapid moves down, bring a little bit more liquidity, retail interest into the market, institutional interest into the market, and from there, the end of 2022 may see that 100k Bitcoin that we're sort of looking for. But at the moment, as it stands, certainly this would definitely be a good time to look at your strategy with Bitcoin and cryptocurrency, how you're playing this market. To be grim, if we can't hold 38k, or let's say 37k, that 30k Metcalfe's law may be on the card. So if we have a look here at our previous dips, where are you going, Ty? I do this every day, why don't I know it? Here we go. Price range. So when we fell from the highs down to here, it was a 51% move. So a 51% move would take us down, so 51.12, would take us down towards that next fib level at around 32k. Do I think that 30k is on the cards? Maybe not so much 30k. If we put on our volume profile from here, we can definitely see that there's a bit of a volume chasm from here down towards that 38k. There's no liquidity in this area here, and our point of control sits at around that 34,293 level, which shows the most amount of volume traded in that area. So if we fall through and everybody's looking for 30k, it would certainly make sense for that area to be front run around that 32k level, where people aren't going to get their buys down at this demand zone. So to me, that makes a lot of sense. But we're getting ahead of ourselves a little bit at the moment. Let's just see what comes of this market and play as it comes. So as I said, Raoul Pal on Twitter, really great guy to be looking at. Raoul at Raoul GMI. Of course, you can look at our Wyckoff Logic article on YouTube. Just type in Unity Trading Group /Wyckoff, or look at the videos that we have here. Tens of thousands of people have watched these now, and this will give you everything that you need to know about market cycles, how to trade them, and what to look for in this next accumulation range. Thanks for sticking by. I'm Tex. Take care.